Mart India is the first corporate on our radar today. If you remember, the promoter entity sold 5% stake in the company to meet their minimum public shareholding norms. Let's find out more. Premchand Devarakonda, who's the Chief Financial Officer at Mart India. Remember, it's the fourth largest consumer durable company and electronics retailer in India. So we'll get a better sense of demand trends as well. Mr. Devarakonda, thanks a lot for joining in. Before I get to the business of things, I wanted to understand, will the promoters look to sell any more stake now that the minimum public shareholding norms have been achieved?
Right now, good morning, first of all. Right now, they don't have any further plans to sell stake in the company.
Okay, so no plans to sell further stake in the company by the promoters.
In fact, there is a capping. Like in a year, they cannot sell more than 5%. So that has already been sold.
No, but once this timeline gets done of 1 year, do they have plans to offload any more stake?
As of now, there is no discussion around that.
Okay. Can you tell us a little bit about growth as well? I mean, it's been, in the quarter gone by, you've had solid 20% growth on your top line. How are the demand trends at the moment? And is this 20% growth rate something that you can sustain?
It is easily sustainable. We can sustain that 20% growth rate year on year. And in fact, the categories like air conditioners and mobile segments are doing very well. So in the first quarter, we witnessed about more than 30% growth in both these categories. So thereby, I think this year also that 20% growth is possible.
You know, Mr. Premchand, good morning, Prashant here. When you look at consumer durables as a segment, right, and look at, these appliance sales, and I was looking at data for the first quarter, the quarter before that as well, at an industry level, sales are actually down. The industry has not been doing very well. I'm talking about these, ACs and washing machines and, other items. So, what are you doing differently which is allowing you to kind of, grow like this? And what gives you the confidence?
See, in these, in the markets where we operate, that is mainly AP, Telangana states. So where we are the preferred, preferred retailer for any of the consumers. And also we have a lot of tie-ups with brands and NBFCs where we roll out multiple offers to the customers. Thereby, I think they are getting the best buy. So that these offers are really like putting us on a different platform as compared to our competitors. In fact, in the first quarter, we have seen significant growth in our top line as well as in the bottom line. And also in all the categories, we have achieved remarkable growth.
Okay. All right. Hi, good morning, Mr. Premchand. A couple of questions there. You're predominantly in AP and Telangana, as you said, but you had forayed into the NCR region. How do you see your geographic mix changing? Because that's one of the largest markets here in India, point number one. And point number two, large appliances. They used to account for more than 60% of your total mix. It's come down to sub 50%. So how do you see the mix changing?
This mix will remain more or less the same because the large appliances will be around 50% and the mobile segment, mobile will be 40% and balance will be the other small appliances and accessories. So that will remain more or less unchanged.
Okay. And geographic split? Because, you made your foray into NCR. That's a big market, big potential as well. So how do you see that changing?
Yeah. See, we were actually, this particular, this summer was the testing period for us in NCR because we are less than 1 year old. As in the first quarter, we were testing that markets. Unfortunately, that season got impacted by unseasonal rains. So we have to wait and see test the waters in the upcoming festive season.
Okay. I just want one number from you. The same-store sales growth in the quarter gone by was around 14%. What can it be in the subsequent quarters?
I think last year, financial year 23, our same-store growth rate was about 17%. And this year also, we are anticipating around 15 plus.
Okay, so 15 plus is what you're looking at in terms of same-store sales growth in FY24, correct?
Yes.
Okay. And, any online or any presence online that you're looking to sort of expand? What is the strategy? Because that channel as well has picked up in a big way. So currently, what are the revenues that you generate from there and what is the expectation?
See, our online sales contribution has been less than 1%. It's around 1% of our top line. So our focus will be more or less the same. Like we are not aggressive on online platforms. So we want to focus on the existing retail outlets, and we have to establish ourselves in the NCR market, and then we look at other options.
Okay. All right. Very quickly, before we let you go, you're going to be delivering a 20% growth. So on a sales to market cap, you're trading still attractive even after the big run. Two questions. One is, what is the margin outlook? And the second part is, working capital days. What is the guidance you could give us?
Yeah. See, we have to maintain, our working capital is around 60 days. So that's how we have to turn out our inventory. So that should be maintained. And what is the other question?
On the margins, sir. Margins have been around 6-7% odd. Yeah.
That is EBITDA margins you're talking about. EBITDA margins this year will be between 6.5 and 7%. That could be achieved.
Okay. All right. It's been good speaking to you, sir. Thanks so much for stopping by and giving us those details. The stock has had a big run. You're clarifying that the promoter entity is unlikely to sell further, but you're also saying revenue growth will be a good 20% for this year, with SSG growth of around 15%. The stock in the last 12 months is up a whopping 140%. For the time